Hey everyone, it's Lharris with Fathom Realty, and I'm here with the coolest cat in town, Catt.Fleetwood, and we're going to be talking a little bit more about mortgages. We're going to give you lots of education today. We're going to have a little bit of fun too. So we are here up on Six Forks Road in her office. Her and I are both Wake Forest local. We work in that area primarily, so we are happy to bring you some information today and to see how we can help you. So I'm going to let Kat just say a little bit about herself and where she works, and then we'll get started on your questions.
My name's Kat. I work at Fairway Mortgage Company. Been in the business about 5 or 6 years and love my job. Love helping people. So that's why we're doing this video. Because I, once again, don't like being on video. This is the second time.
This is all for you. This is all for you.
This is not for me. This is for me so that I can do this.
And if you can't tell, Kat and I like to have fun. So that's probably the best part about working with us.
Yeah.
We like to have a good time. So here in the great state of North Carolina, it is raining, which I don't know if that's better or worse than snow. You can see the Christmas.
It's better.
Yeah, you can see the tree in the background. So we've got the Christmas spirit, but I, in my mind, am on a beach somewhere. That's why I wore my tropical shirt today. So we're just visualizing.
And I, in my mind, am a bounty hunter like Boba Fett. So I'm wearing my Boba Fett green sweater that just so happens to match your shirt.
Exactly.
We totally didn't do that on purpose.
Exactly. So it's all about mindset, my friends. But I hope you're staying dry and warm out there. So we're going to take a couple of the questions that we got off of our first video. So our first video, we kind of did the top 5 frequently asked questions about mortgages. We debunked those, gave some great information. And that also kind of, in turn, resulted in some more questions from the viewers. So we're going to take those and we're just going to roll with it. So we're going to answer some of those questions, make sure that we explain exactly what that is. If you didn't catch the first video, I'm going to post the link above to the YouTube channel. The videos will kind of progress and build on each other. So if it's something you're interested in, the particular topics will be listed for each one. If there's a specific question that you have, you can either find it in one of the episodes or feel free to reach out to us and we can answer any specific questions that you have to your situation. So the first question that we're going to talk about today is why would I want to get a mortgage lender to pull my credit score? So I have Credit Karma, and my Credit Karma looks fantastic. What does that score mean when a mortgage lender looks at that?
We don't look at that.
Okay, good answer.
Credit Karma is great. It's a great tool. It's an easy way for you to monitor what's going on with your credit and to know kind of the basics of what's happening. They give you tips, and I encourage everyone I know to get it because it's a great tool and it's free. But Credit Karma Credit Pull is more of a general number.
Okay.
Where we pull from a mortgage standpoint, just like a car is going to pull from what's important to a car loan or a credit card. And there are basically 5 things that credit is judged by, and they're judged on different kind of levels of importance depending on what kind of credit you're trying to get. So there is payment history, available credit. So that means it's important for you to have a credit card and have credit available to you. Don't max everything out because that says that, oh, well, you know that's going to make your score go.
Yeah.
It's amazing. When you have people pay down cards to under 50%, their scores usually go up tons of points.
Yeah. So don't go to Kohl's. It's a trap. The Kohl's credit card is a trap.
It is a trap.
I don't know if you want to talk about retail credit cards versus big credit cards.
We can get into that another day because there's a lot of that, but just don't do it. Macy's, no. JCPenney's, no. Kohl's, no. Okay. All right, so then we have credit history. So that's kind of like your length of credit. So when you have, and this is the stupid thing, and this is really stupid, you don't really get credit for that aspect of it until you've had a card for like 20 years.
Yeah.
So almost nobody gets credit for that. So I always try to tell people, if you have children, put them as an authorized user. Don't give them a credit card, but put them as an authorized user as soon as you think about it, maybe when they hit their preteen years, to start building their credit. Okay. Because no matter what Dave Ramsey says, the whole world revolves around credit. And you can use credit as a tool, or you can use it as a way to go down like a sinking ship.
Yeah.
So
when used correctly, though, it can be something that helps you.
It should be a tool and not not a source of income or whatever. Anyway, okay, so I'm talking, oh God.
That's okay.
I'm sorry.
That's all good.
All right, so, and then there's new credit. So every time you apply for a credit card, it dings on your credit.
Yeah.
And so if they see a whole bunch of dings and a whole bunch of times that you've, then they're like, why are they applying
Probably
for so
not
much
good
credit?
when you're about to buy a house.
No,
right?
no.
Okay.
So you don't want to have that. And then the types of credit. So they like revolving credit, which is a credit card, student loans.
Nobody likes student
Nobody
loans
likes student
except
loans,
for
but
mortgage
they do.
lenders.
They do. Well, we don't even like those either because they get in the way, but it's another type of credit.
Yeah.
Installment loans, like a car loan. Don't go get Finger Hut because I see Finger Hut collections all the time. That's another trap.
That's a whole nother episode,
yeah,
like the crazy things that you see on credit pulls. I'm sure that's a whole different set of questions we have for you.
And people don't understand like what they're getting into. They're like, oh, I get 20% off my first purchase, and then they're, at a 25% interest rate on a credit card, and they're just paying interest and interest and interest. So anyway.
Okay. Perfect. So if you have Credit Karma, great tool, but really you want to reference your professional lender and have them pull a mortgage credit because that's going to look at the breakdown and the weighting of your score a little bit differently.
And the thing is, like, if your credit is suffering, just ignoring it isn't going to help.
Yeah.
You have, and pulling it is going to help because then you're going to be able to look at it and see what needs to be done and how you can fix it, and you learn. Don't be afraid. Don't run away from it.
Yeah.
Because then that's just that much more time that you have to wait before you can buy.
Right.
So, I mean, I think anybody who is thinking about buying a house within a year, or is even thinking about it, like they might not even be even close to being ready, but they're thinking about maybe being ready.
Yeah. Credit is the first step in the preparation process is to get that in line, and sometimes that takes time. So that needs to be the first step.
And you don't want to have any goose eggs pop up that mess things up when you find a house.
Yeah.
Nobody likes that.
Yeah. Nobody likes surprises when it comes to buying a house. We can all agree on that.
No.
Okay, so Credit Karma, great tool, but use your resident expert to pull your credit because it's going to look a little bit different if you're applying for a house or thinking about looking at a house. Okay, the second question that we had come in last time was about PMI. So what on earth is PMI? And can you give like the 5-year-old version explanation of it so that we can all
So private mortgage, it's private mortgage insurance, and it's used to protect the lender against default by the borrower. Okay, so it basically is an insurance policy for them to have on you. All the loans have PMI, just about.
Okay.
If you hear about a loan that doesn't have PMI, it's because A, the person put 20% down, or they've gotten to the 80% loan to value, gotten 20% equity in the house.
Okay.
Or it's VA. Any veteran who's eligible for a VA loan does not pay. There is another funding fee that goes along with that, but that's different. We don't have to worry about that.
Okay.
And then there is the lender paid or single premium upfront. So that means you did pay mortgage insurance. You either paid it in a lump sum up front, which is a great thing. I do that for a lot of people. It saves people thousands.
Yeah, I'm sure.
Or it's lender paid, and that means it's basically eaten up in the rate.
Okay.
So you're going to have a higher interest rate, but you're not going to be paying monthly PMI.
Okay.
So you're still paying it. It's just a roundabout way, and it depends. Sometimes that's a good idea. Sometimes it's not.
Yeah.
It depends on the situation, 100%. Like, everybody's situation is different. So when you talk to somebody, and I think I said this last time, if somebody's like, oh, you need to get this loan with this and blah, 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 blah. Well, no, that might not be the right thing for you.
Yeah.
Government loans have it, and they last for the life of the loan. So that's one thing to consider. But sometimes a government loan is the perfect loan for somebody.
Yeah.
It just all depends on your credit, how much you're putting down, what your income's like. All these different factors come in, and there's no, I don't want to reference another mortgage company. There's no like magic button that you can push and get approved.
Yes.
You can't just go and type in stuff and be like, I'm in.
Right. Like Rocket Mortgage, I'll say it. Yeah. If it's an app, it's not a real mortgage.
No.
You need somebody that's going to customize what fits your needs.
And pick it apart and find what's going on and know the ins and outs of all of it so that they give you the right information.
Yeah. So PMI is just a small piece of the puzzle, but I think sometimes if we are on, Zillow or someplace like that, and we're looking at these mortgage estimates and mortgage calculate, that's not going to include that PMI.
It's
so
based
some people
on
get a little bit,
20%.
some people get a little bit of sticker shock when they go to a mortgage lender and they run the real numbers and they're like, oh, I thought this payment was going to be this, but now it's a couple hundred higher or 150 higher, and it's like, well, that was the interest rate that fluctuated, and so the things online are great, but they are far and few between very accurate.
I have an app that we'll post the link to, and it's an app that you can use. It has a good mortgage calculator on it. A legit one. It has lots of good information. You can also apply through it if you want to, but that's not the point. Like, I just want you guys to use the application and all the stuff that it has because it's got good quality information.
Yeah.
But when you see anything online about 4.5% interest rate, APR, 5% or whatever,
they don't know you.
They don't know you, and they have to advertise to a broad enough spectrum of people that they're not excluding people. They're hitting enough of the population that it's okay to say it.
Yeah. But
they're also looking at 20% down, 740 score. That's not everybody.
Yeah.
There's a lot of people like that, but that's not everybody. In fact, all my first-time home buyers, almost
nowadays,
exclusively, do not have 20% to put down. I don't know anybody who has $30,000, $40,000, $50,000 laying around who's starting a family.
Yeah. Student loans. Student loans are real. So that's an awesome tool. So we're going to post that up in the description. Thank you for offering that today. So we'll leave that there for y'all if you want to take a look at it and just play around in it. That is going to give you a much better estimate of what your payment could look like than using anything on a website where you're looking for houses. So if you're on a website looking for houses, what do they want you to do? They want you to buy a house and they want you to come back to it. So of course they're going to lowball you on your payment option. So you really want to know what you can afford in real life, not just in online life. And that calculator is going to be one tool that
it's
can
really good. And
kind of
again,
help you get there.
Back to interest rates for a second, just because it popped into my head. A lot of times when I'm quoting people interest rates, they say, oh, well, so-and-so is quoting this, and they're quoting this, and they're quoting this, and it's so much lower. Well, what they're not telling you on those other places that are quoting is they're actually charging discount points. They're charging you for that rate. So if that's something you're interested in, I can do that all day long, but I'm not trying to charge people thousands and thousands of dollars for something that's not, going to affect them immediately. I'd rather you have money in your pocket, money in your savings, and you pay an extra $15 a month than take thousands of dollars of yours up front. And then what happens if the AC goes out? Yeah. And you need $5,000 for that, but you put it to buy your rate down. Like, that doesn't make sense to me.
And that's real life. And it's really great, to work with somebody that has that philosophy, because that's what happens. Like, nobody likes to move poor. Like, when you move, you want to go to Target, you want to redecorate like it's HGTV for life, farmhouse, or whatever is going on right now. Like, you want to do that, and you want to buy new furniture, and things are going to break. That's part of being a homeowner. Home ownership comes with bills, just like owning a car comes with bills. You're going to have property taxes. You might have HOA fees. So we don't want you to move poor, and we want you to be well educated on what you can really afford. So when you're looking at those mortgage calculators, considering things like PMI and interest rates.
It's crazy, because I bought my first house as a single mom. Yeah. And I mean, I think that the loan officer that I worked with was amazing, and he was actually part of the inspiration to get me in this position. But I think that I wasn't fully prepared for the reality of home ownership. Yeah. And going into it, he was very helpful. He helped me with closing costs, and that's something that we can do a lot of times, and stuff like that. But I moved into the house, and like 3 or 4 weeks in, the little circuit board on the heater or something went.
Yeah.
It was $300.
The motherboard.
Something. Yeah, it was like, I'm like freezing. It's like 50 degrees in my house. And I'm like,
home ownership is great.
Yeah. And then there's, a leak under the sink and stuff like that. And those are things that just happen. Like, it doesn't matter.
Right.
You're going to have to deal with it. And so.
Spoiler alert, you're not going to move into a perfect house. Even if it's new construction, it's just real life.
Houses are quirky and they do weird things.
Yeah.
They all have their own personalities.
Yeah, some are possessed and some are not. Hopefully you get one with good juju.
Yeah.
I'm just kidding. I have a detector for that if you're interested.
Oh, yeah.
Totally kidding. But yeah, that's great information. So use the calculator if you're interested in playing around with that. That's really going to give you a better estimate of where you're at. Don't move poor. We care about you. Don't move poor.
No, we want you to have money in your savings account.
Yes. Okay, so the last question that we had come through was, working with you and others like you, you're an independent mortgage professional. So what are some of the differences and benefits in working with a mortgage insurance professional versus going to like my credit union or one of the big commercial banks or somewhere like that?
Every aspect of mortgage and who you work with is going to have its pros and cons. I will not disparage other entities. I will, however, tell you about me. I'm licensed. I have to maintain a license. I'm very, very heavily regulated federally and state. We have an insane amount of rules and laws that we have to abide by, and they change, and we have to be on top of it. We have to know what's going on at every minute, because if we do something wrong, we lose our job.
Yeah.
We hold the ability to know everything that we know about people very dear, and we take it very seriously. And so I think that maintaining a license is important.
Okay.
I think that puts you in a position
It differentiates you from some others.
There's more that's required of you. And then where I work, Fairway, we do everything in-house. So you come to me, I figure out what fits you, not what you fit. I'm not going to put you in a place. I'm going to find what fits you.
Yeah.
And then we do everything in-house. So we underwrite the loan. We own our appraisal company, so we work very closely with them. We're a very tight-knit family, even though we're a big company.
So when you say everything in-house, I know how important that is just from the realtor aspect of it, but like what does that mean to someone looking to purchase a home? Why is that important that you do it all in-house?
My underwriter is sitting in carpool every day. I can call her on the phone if I have a question about a file. My processor is sitting at our other office in Clayton. My assistant's here. Our closers here, like everybody's here. We all work together. We all know each other. We all are working for the same goal. When you work sometimes with other types like brokers, they're going to be working with companies all over the country, different companies, and that's not bad. But when you have a group of people that work together all day, every day, day in and day out, we know the character of each other. We know our quirks. We know how to get around. Get through stuff.
Yeah.
So I think having a team like that and having us all like right here, is pretty profound. I know because I used to broker, and sometimes you couldn't get an underwriter on the phone for a week.
So it allows you to work more efficiently, so you can potentially close loans faster,
way
or
more eloquent than I
just
am.
work more efficiently than. Because you know each other. I mean, that's with anybody. The more you work with people, you know how to read their body language. You know their strengths and weaknesses, and you can kind of play off each other.
Yeah, and when you broker, when you're working with brokers, you may not know from my perspective, I may work with somebody different at the same place every time.
Yeah.
And I have to try to re-establish a connection with somebody that I'm not going to have but a couple weeks with.
Right.
And as far as like the brick and mortar banks, they're a little bit more restricted with their programs. Like some of them don't do government, some of them, don't do this, don't do that.
Okay.
And that's not that's bad.
Yeah.
But I think when you work with somebody like me, you have me whenever you need me. I'm going to answer your call, answer your text. I don't work banker's hours, so.
Yeah. So you're more available, and it sounds like you also have more options. So you have more flexibility in what you can provide.
Yeah.
Than maybe a traditional bank.
Yeah, I don't want to say anything bad.
Okay. We're not bashing anybody.
No.
We're just kind of,
we're highlighting the good things about me.
Yeah, so pros and cons, and just a little bit about kind of how her company works and how they're able to work very efficiently, and just get things done when they need to get done. And who doesn't like that, especially in this market, and in this day and age, like we like to get stuff done. That's how I operate too, so that's why I love working with Catt, is that, you know, there's high communication, there's high efficiency. We get stuff done when it needs to get done, especially if it's high importance. We'll make sure we take care of you.
Communication is key.
Yeah, absolutely. Absolutely. So our final question that we had this one last time, but we continued to get it, so we're just gonna go over it again, is how do I get started and how soon should I get started? So like if I know I want to buy a house in the next like 6 to 12 months, like say I just signed a 1-year lease in my apartment and I know my lease is going to be up and I want to buy a house when my lease is up, what do I need to be like preparing? What do I need to come to you with? And how does that first conversation go?
I would say that if you think there's an issue that you need resolved, start as soon as possible.
So if you already know you need to work on your credit.
If you feel like, yeah, like I've got some collections, or, you know, I don't know what this is on my credit, you know, how do I get rid of it? Start sooner rather than later. If you feel like you have good credit and you are financially padded enough and you feel good about that stuff, I would probably like 3 to 4 months before you're ready, just so we can have everything done.
Yeah.
And then when you start looking...
Before you're ready to start looking, not before you're ready to move, right?
Yeah, no.
Okay.
Don't wait until a month before your lease is up, because nothing's going to happen that fast. I mean, we're pretty fast, but we're not that fast. And some things you'll need, pay stub if you're self-employed, 2 years tax returns if you're self-employed, because we're going to have to calculate your income. A W-2 from the previous year. And that's pretty much it. Like, as long as you can provide 2-year work history, 2-year living history, and you can fill out the application, we can go through and answer all the little questions that you may have missed or whatever, just to fill in all the blanks.
Yeah.
But it's easy. It doesn't take long, and it's pretty painless.
Yeah. So just to kind of get a gauge where you're at, that's the first step, is to...
Yeah, and whenever you feel like you need to find out, that's when you should do it. I mean, if you feel like it's time, then come on, it's not gonna hurt.
Yeah, knowledge is power. So even if you want to buy 2 years from now, it is never a bad idea just to kind of know where you are and to have a plan, especially if you do have some things that you think might be red flags, or that you think you need to work on. Just giving yourself that time, just knowing what exactly you need to work on.
And I also have a great savings plan that I give people, especially if, you know, they think they're a year out or they don't have any savings. It's a great way to save, so I'll include that if we can put a file. Include that in there, because it's really awesome. You can go through each week, and whatever you have to save, you can just kind of cross it off the list. You don't have to follow it line by line.
Yeah.
And then all of a sudden you have like $5,000 and you're like, whoa, how did that happen?
See, this is why you start early, so you're at least on a path towards home ownership, even if it's not for a while.
And that's just a good habit to have anyway. Just have this and just save every year.
Yeah.
You know, it seems to like keep getting bigger and bigger. The more you do it, you're like, oh, I can save a little more.
Yeah.
It's kind of addictive, so.
Yeah. In a good way.
Yeah, in a good way.
In a good way. So yeah, the first step is just reaching out and figuring out where you are, where you stand, you know, if you're going down the right path or if you need to divert a little bit and go down a different path, and that's okay. But knowing where you are, knowledge is power. So if you do want to, you know, look at houses, get with a real estate agent, the first thing, if they're a good agent, the first thing they're going to ask you is, have you already been to a lender? Have you been pre-qualified? Do you know what you need to work on to get pre-qualified? So don't wait until the last minute and then just contact a realtor and say, hey, can we go look at these 10 houses that I found on Zillow? It doesn't really work that way. And because the market is so competitive right now, and this is such a great area,
you have to be able to push the trigger.
you have to be pre-qualified.
Pull the trigger.
There are, whatever, push the button, pull the trigger. We've had wine, it's all good. But a lot of sellers in this market, because it's so competitive, they will not even take your offer without a pre-qualification letter. Yeah. And they will put that when they list their house on the market. So if you think that you're gonna wait until the last couple months and then just go out on this wild goose hunt and look at 100 houses, first of all, you're gonna have a hard time getting an agent to agree to do that unless you're pre-qualified. And second of all, even if you did get an agent and you wanted to make an offer, the seller's probably not gonna accept that offer without your pre-qualification letter.
Well, and it's just a matter of respect. I mean,
Yes.
you have clients that you're working with, not just the one person. And if you're driving around and doing all this research and putting together, you know, comps and trying to pick whatever it is that
Yeah.
you guys, the magic that you guys work, I know it's a lot of work.
Yeah.
And you don't want, it's just, you don't want to send somebody on a wild goose chase. You
Yeah.
want to make sure that you're respecting their time and
Right.
their
Right.
knowledge and everything like
And
that.
even worse than that, you know, worst case scenario, you find your dream house, you put an offer on it, and then you can't get financed for it. And it happens, right?
No,
It
no, not to me.
Not with you.
Not in my family.
It doesn't happen to me either, but it happens, and
It does
that is
happen.
that is heartbreaking. Like, you have to know that you're putting yourself in a position where you're actually applying for something that you're going to qualify for, and you're going to be able to finance it as long as it appraises. So, you know, you don't want to get your hopes up. You know, it's like going to Parade of Homes. Oh my gosh, heartbreaking. But, you know, you don't want to look at something you can't have. There's no reason to do that. It's hard on the agent. It's really hard on you and your family. So, you know, knowing what you can actually afford helps you to actually look at things that are realistic. And then it puts you in a very realistic ballpark of what you're looking
And then you're
for your
confident
family.
and you're not all emotional
Yeah.
about it, because it's an emotional,
It's stressful.
it is.
Yeah. And not having the stress of wondering if the funding is going to come through or
Right.
not. Like, you take care of that ahead of time, and then you have the confidence.
I basically I do so much work on the front that when we go, it's like, okay.
Yeah.
And my people are like, should I be worried? And I'm like, no.
Not really.
No, I mean,
The hard part's done
Mhm.
at that point.
I mean, I get all that work done first, so.
Yeah. So get all the hard stuff out of the way, and then we can go have fun and look at houses.
Yeah. And then we can all go have a glass of wine together. And,
We'll come to your housewarming party.
We
I
will.
attend housewarming parties.
Yes.
I think it's part of my job, but not really.
no, but we're always invited, so apparently we're doing something right.
Exactly. But if y'all have any more questions, please feel free to drop them. You know, we're going to base our future episodes on the questions that we get in.
Yeah, what do you guys want to know?
Yeah.
Like, do you want to know boring market stuff? We can talk about that.
Yeah.
It's not boring to me.
Yeah.
But I mean, like, what do you want to know?
Yeah.
We'll talk about it.
Definitely. So you can drop it. You can send us a private message. And we'll also make sure to, like I said, post the prior episodes and have the link so that you can go back and look at those too, because it might answer your question in some of the other episodes as well. So we're going to post most of our personal information up in the description just so you have ways to get in contact with us. There are no stupid questions. It is never too soon. But just know, you know, the first conversation we're going to have is about, you know, can we talk about where you are? Can we talk about your purchasing power? Can we take a look at where you are and get you on a path to home ownership?
And
So
we clearly like to talk, so you can call us and we'll talk to you.
we will answer and we will talk to you. We promise you that.
That's not a problem.
Yeah, but we work here. Like I said, we're both in Wake Forest, so we really believe in supporting the community and definitely supporting people that want to move here. That's something we're both really passionate about. We want you to love where you live, and we hope that it's here because it's pretty awesome. There's a lot of exciting stuff going on right
Yep.
now.
It's a great
Yeah.
place to live.
It is. It is. There's a reason everyone's moving here. And I'm a northerner that moved here, so I can't hate on the northerners that move here. Because that's me.
I'm just a military brat, so Marine Corps brat, so I made this my home. I chose it.
Yeah.
So
Yeah.
that's a big deal for us.
Yeah. But saying that, there is a huge mix of people here, so everyone is welcome, and we'd be happy to help you get here. So please reach out to us if you have any questions. We can help at all, and we'll talk to you again soon. Have a Merry Christmas, Happy Holidays, bye.